Zervos, why do you think we saw the big turn in stocks and bonds as Fed Chair Powell started talking?
Sarah, I think there were, as you pointed out in your opening comments, there were some people who thought that they may switch things around and buy some more 10-year and 30-year securities and extend the duration. There was a little tiny bit of disappointment, and that evaporated pretty quickly. I don't think there were a lot of people that thought it, but and the move really wasn't that big, and the 10-year note might have been holding on to some idea that there was a new buyer coming to town for a little bit more size. That didn't happen. But again, I don't think that's a big deal. I think actually all of these market reactions to this were extremely muted. And to be perfectly honest, probably one of the most boring Fed meetings we've had the privilege of sitting here and talking about all year.
Never boring.
Honestly,
don't say that.
And one other thing, I kind of feel like with the guidance in place, I'm not sure we're going to get that much excitement next year in Fed meetings. I'm always hopeful. We thrive on a bit of volatility in our business, but I think monetary policy is really set on the right pace. It's there to backstop. It's probably not there to do too much more unless things really deteriorate, and they're not looking like they're going to do that. If anything, they look like people are getting ready for some upside surprises as the vaccine takes off. So I think we're taking monetary policy a little bit more out of the equation next year. And I think that's probably good news, not bad news.
Sarah, Bloom Raskin, actually, just to take off on that point, Chair Powell did say he's pleased to see the Fed's guidance and new framework embedded now in market expectations, whether it be for when the first tightening might be or inflation expectations, things like that. Might that change? And I'm asking here because if you believe the other implicit message of the markets and investor consensus that we're going to get a real acceleration in the economy next year, maybe there's going to be this intermittent period where you start to think you see inflation on the rise. Do you think the market will end up having to test the Fed a little bit next year for its resolve in these areas to keep things very easy?
Well, the market might, in fact, have to test the Fed's resolve, but I have to say the Fed's resolve is rock solid. When it comes to its credibility, it's earned really by virtue of the fact that when it makes a statement, it is very slow to change it. And that framework, as we all know, was a long time in coming. It took really quite a lot of effort to put it in place. It is really early days for that framework. So I would be reluctant to think that it's going to change anytime soon. I think it's one that is there. The Fed's credibility is at stake, and my sense is they're going to hang on to it for quite a while.
Shepard Smith here. Thanks for watching CNBC on YouTube.